So now is the time for our fireside chat with Luca Passa, who is the CFO of Snam. Maybe a few introductory words before we go into the conversation. You know, one of the themes that we have been promoting, particularly around transition, is the importance of having engagement and dialogue with the hard-to-abate and fossil fuel sector. Snam is a major energy infrastructure company in Europe, and by some measures, it's the largest gas utility in Europe. So, you know, as part of this dialogue, I couldn't think of anything better than having this conversation with you. Now, maybe to kick things off, you've announced at Snam a very impressive CapEx plan. I think it's of, actually, I don't think I know, about 14 billion euros, and you've reaffirmed your sustainability ambitions. So, you know, what can you tell us more about this plan?
Thanks, Nicolas, and thanks to ICMA for the invitation. Yes, we are the largest infrastructure when it comes to molecules, and in particular natural gas in Europe, and we are involved in transport, storage, and regasification, which are the three main businesses in this value chain. As you said, we updated our plan, which involves 14 billion of spending over the next 5 years, the majority into the regulated business for security of supply, resiliency of our transport network, and to the energy system integration. Now, it's a lot of infrastructure spending, meaning that this company was a few years ago investing less than 1 billion per year. We're now investing 3 billion per year, and that is needed by, you know, clearly the evolution of the energy mix around Europe, and in particular also around Italy, as you know, said before by Mr. Iacovone on how the penetration of renewables is in Italy. Now, the focus for us is clearly to evolve an infrastructure that is, I would say, resilient and flexible enough in the change of the energy mix that is being affected quite heavily by the geopolitics. If you think that Italy and the majority of Europe was importing 40% of its gas needs or gas demand out of Russia just a few years ago, and that is, this flows now from pipes is basically zero, from LNG will be zero very shortly, given you know, the commitment that the Commission is taking and the governments are taking. And now some of the gas that we were taking from the Middle East in liquefied form is not coming anymore because of the war. Therefore, we need to ensure that our infrastructure is available to basically change the flows of gas that is coming into the country. And to some of the businesses that we have also internationally, we are present in Greece, we are present in France, in Austria, in different countries in Europe, and that's what we are doing. Now, our investment, notwithstanding the amount, are investment for, I would say, a longer term. The useful life of our transportation network is in the region of 50 years, 50, meaning that notwithstanding we will have geopolitical tension in the past, currently, and potentially in the future, we need to plan investment which are resilient in what we will see will be the changes, therefore, extremely flexible infrastructure. Now, 40% of our investment are taxonomy aligned, 55% of them are SDG aligned. We mainly insist on SDG 9, 11, and 13. And clearly we are a transition corporate, meaning that currently our infrastructure is mainly used to transport natural gas, which among the fossil fuel is the less polluting or the less emitting, but the evolution will be to molecules which are either decarbonized or completely green. And that's also where we're investing in the future. So in our investment plan, 12.3 billion is in the regulated natural gas business, 1 billion is for new technologies for decarbonization, carbon capture storage for the majority. We are developing one of the largest projects in continental Europe, and the rest will be to deploy an hydrogen infrastructure for 100% hydrogen transportation between the south of Italy and the south of Germany. That's in a nutshell what we do.
In your plan, you're also targeting 95% sustainable financing. So how do you plan to achieve that? It's very relevant for our audience.
Absolutely, and it's relevant for us as well. I mean, first of all, sustainable finance is not just labeling on how we do financing for the company. It's part of the strategy. The company has a commitment to meet clearly net zero by 2050 across the 3 scopes, carbon neutrality by 2040, and we have targets of decreasing our emissions between now and then. We currently are already at 89% of sustainable finance. We started at 40% in 2020, so we did a major step up. What does it mean? That every product in terms of financing that we utilize, whether it's a bond, whether it's a loan, whether it's a revolving credit facility, or anything else, has some sustainability features within it. Now, we developed our strategy on sustainable finance, I would say in the last 3 to 4 years. We started with climate action bonds, transition bonds in 2020, and since 2023 moved to what we feel are the 2 standards currently in the market, use of proceeds, i.e. European Green Bonds, ICMA line and taxonomy line, as well as sustainability-linked bond, especially for the longer part of our curve that are linked to the reduction of GHG emissions, especially for the carbon neutrality and net zero in 2050. It's not easy, but it's a value for us, meaning that sustainable finance allow us to reach the lowest cost of capital for the company. And clearly, there's been a lot of discussion over the last probably 15, 20 years of what is the greenium, how do you actually reduce cost of capital. I'll just point you to one example. We were in the market last week. We did what we call a combo transaction, i.e. we issued both a European Green Bond as well as an SLB. The basically dark ESG investors in the transaction went over 50%. Which means a larger pool of liquidity, better terms in terms of cost of financing for the company, better cost of capital, higher net income, higher dividends for our shareholders.
I must say it's very exciting that you issued an SLB. I'm less surprised by the EU GB, but that I think is great news for that product, which was actually largely pioneered in the Italian market. Now, staying on this topic of labels, as you know, we spent a lot of time working on these, and it'd be very interesting to have, you know, your perspective on the current landscape. You know, what do you think works? What isn't working so well? And you know, we're especially interested also in your comments you might have on our efforts with climate transition bonds, and noting in particular that actually Snam was way ahead of the curve with transition bonds. I think more than 5 years ago, outside of the framework we provide, but nonetheless, I think very much in the same line of thinking.
Labeling is something that is a little bit, I would say, difficult for fixed income investors. What do I mean by that is, you know, fixed income markets are very simple markets. They need standardization. And standardization when it comes to, let me say, all the features every, I would say, issuance has, to the fact that clearly the ICMA association is there to standardize, you know, what is used both from issuer as well as on the investor side. Now, we feel that currently, clearly, the European Green Bond market or use of proceeds type of instrument, which were probably the earliest into the wave of sustainable finance, are being fully established. There is a European regulation. So there is, let's say, a framework on which fixed income investors are becoming acquainted, and you are not being asked questions when you actually issue those type of instruments, because they know where to find, you know, the reporting, how it is reported, that the reporting is verified by third parties, et cetera, et cetera. Sustainability-linked bonds are the other standards, less, I would say, evolved, with less issuance and more difficulties from the fixed income investors. And that is something that we are trying to make it more standardized by basically using the same KPIs and the same setting of KPIs and reliability on the KPIs, at least at Snam, but generally also for the rest of the market. We're part of the UN CFO coalition. We issued a primer of sustainability-linked bonds in November that is trying to do exactly this type of things. Now, when it comes to the other labeling, they need to be standardized and established. Therefore, there is a lot of discussion currently about the transition label. This is something we might consider to use if, let me say, we see evolutions in the regulation, in particular of taxonomy alignment when it comes to investments, that might reduce our amount of investments for that type of reasons. But the more labeling, the less it's better for the market. Therefore, we need to focus on standardized type of labels.
Okay, so good labels, not necessarily more labels.
I mean, we already use two, and it's a lot. There are, as you've seen from the previous presentation by Mr. Iacovoni, they're just focusing on use of proceeds, BTP Green, all the way. For us, it's more difficult. As I said, 40% of our investment are taxonomy aligned currently. Therefore, we need also to use other type of instruments in order to fund the other investments that do not fall into the EU taxonomy currently.
It's very interesting that you've chosen to issue also an EU GB. And one of the conversations that we've been having over the last 2 days is how the way transition, particularly again in fossil fuel and hard to abate, is being done somewhat differently in Europe vis-a-vis the conversations we're having in Asia and emerging markets. And as was said also earlier, there are parts of the taxonomy which are clearly transition. But the market has decided that, well, we're going to call it green, even if it's going into territory which perhaps more objectively could be considered transition. So my question to you is, I'm assuming you're following the taxonomy quite closely. There's an ongoing dialogue around simplification, around expansion. How do you think that's going? And then, more broadly, there's also conversation on SFDR 2.0. How relevant is that to you?
I mean, regulation for us, because these are regulation for sustainable finance, is the bread and butter of our business. We are a fully regulated business. Therefore, we deal with regulation every day. Now, around the taxonomy in the EU in particular, it was a very long process to get taxonomy approved. I think now is 4 years ago, more or less, 3 years and a half ago. There was an FAQ at the end of 2024 clarifying some of the, let me say, potential misunderstanding of what could be classified or not. And now, currently, there is a revision that should be finalized by the end of the month in terms of the proposal for the Commission. Having this type of evolution when it comes to regulation is very difficult for an issuer like ourselves that invest with an horizon of investment of 50 years. So if you change the way in which our investments are classified, it's a big issue for us. And if you change frequently, it's even a bigger issue. So what I'm trying to say is I think we could do in terms of operators in the market, issuers, investors, but in particular the Commission and in the Commission, DG ENER, DG FISMA, etc., a much better job in setting the rules clear from the beginning. It doesn't change them every 2 or 3 years. When it comes to, I would say, the evolution of other regulation like the SFDR, I don't think that moving to a more decarbonized world means exclusion of businesses which are high intensity in terms of emissions of today. The more you exclude, the more difficult it is to reach those targets. Therefore, there should be actually, rather than exclusion type of clauses in some of this regulation, more inclusion in the regulation in order for issuers that comes from highly emitting, highly polluting type of industries to actually set a path to get greener, even for them, will be much more difficult. Therefore, I don't want to sound cynic, but I don't think we are doing a good job when it comes to regulation for sustainable finance.
I mean, maybe an unplanned question, but rebounding on what you were saying, we concur that, in the feedback that we've provided, particularly to SFDR, but it also came up on the fund naming debate earlier with the ICMA guidelines, is we queried the use of exclusions. And we said there's a contradiction in wanting to engage, but at the same time wanting to exclude. It's just obviously doesn't compute. We're in a new geopolitical environment. There's sustainability, but there's also strategic autonomy. Obviously, again, we are facing conflicts in at least 2 different regions. I mean, are the conversations that you're having with co-legislators in Europe, perhaps also in Italy, has the current environment made it easier for you to be heard, or do you find that it's still, there's still a sort of cognitive disconnect on this topic?
I think that is a more supportive environment because the security of supply when it comes to energy has become at the center stage in Europe generally. And we are a provider of security of energy as a business. But there is still a lot of, I would say, political objective when it comes to, be greener as a label rather than including industries in order to get, greener over time. Now, we heard also the discussion before, 20% of our energy mix comes from renewables, and the target is to get to 40. Now, the primary energy consumption in Europe, 80% is other type of vectors. So, moving to something which is 40, 60, 70% renewables in terms of energy production, first, is not easy. Second, we are very late to the game. I mean, it's taking much more time than expected. And third, we're just working on a very minor part of our primary energy consumption. Renewables are not efficient to fund all the hard-to-abate industries. I mean, Europe is made of chemicals, production of materials, ceramic, steel industry. I mean, this type of industries cannot source energy out of renewables because it is as not efficient as energy as other type of energies. Therefore, we need to be more inclusive to those industries in order to basically transition in that way. In a nutshell, I think we should rethink a little bit how we integrate and how we improve the energy mix around Europe over time.
Very interesting. Coming back to your comment about stability of regulation and the tendency for us to be in sort of a permanent debate on sustainable finance legislation, and by the way, our feedback on SFDR was we didn't need to do another SFDR, but we respect the will of the co-legislators and the initiative of the Commission. But sustainability legislation isn't just about finance. There are many other initiatives. I mean, most perhaps relevant right now is CBAM, the Carbon Border Adjustment Mechanism. There's also been broader initiatives around targets in electrification for cars, et cetera. My question is, putting aside finance for a minute, what broader initiatives at a European level or at a national level do you think would advance sustainability more significantly? What is missing?
I think, the word again is inclusion. I mean, we cannot target the evolution of an energy mix just by focusing on 1 or 2 technologies. We need all technologies at work because we are already late in the game. I mean, if you think that, COP15, I mean, where the Paris Agreement was signed, and it's now 11 years, set targets for 2030. 2030 is in 4 years' time, 3.5, and we're already late to those targets. Therefore, the evolution of technology is really the key. Now, the time of the evolution of technology will dictate more or less how fast we can actually meet or, I would say, go towards those targets. But we need all technologies because, I mean, when it comes to energy, which is the primary component of pollution, energy clearly has an evolution in terms of technologies which has been very limited, and it's counted on decades rather than years. You know, the windmills for wind production or the PV solar panel are more efficient, but the technology is exactly the same of 20 years ago. When it comes to combined cycle, i.e. gas to power type of energy, the turbines are more efficient, but the conception of the technology is the same of 30, 40 years ago. The evolution of technology will take time and is the one that will allow us to do more, but every technology needs to be supported for the goal, and currently is not the case.
I mean, just rebounding on what you just said, do you think that we are under-prioritizing innovation and underfunding innovation from a technology perspective in the energy sector?
Yes. No, in a nutshell, yes. I think we should invest more. We are investing more as a company, but clearly we're talking about innovation of different scale, where you need to have European programs, European incentives around it. There is clearly some type of innovation. There is a budget at the European Commission level, but you know, few billions of investment on innovation at European level is a drop in the ocean, to be honest. There is a lot of talk about, you know, the new nuclear energy, but again, this energy, notwithstanding, is tested and I would say projected now, will be available at scale in 15, 20 years. So the lead time in order to get there is just enormous.
Thank you for that. We've covered the topics we agreed. Is there anything you'd like to add as a final word?
As a company, we are very much involved in this type of issues. Besides being the CFO of the company, I'm also in charge of sustainability. So for me, it's the day-to-day, basically, and we deal with, you know, with the regulator, with the market, etc. We try to innovate as well in the market, and I think sometimes you need to be bold in, you know, what you say in order to change things. You know, the situation, the geopolitical situation is making markets more volatile, access to market, access to financing more difficult. Therefore, you know, more work on when it comes to regulation and when it comes to instruments available for higher spender, because we are a big spender across Europe. It's very relevant because we are also part of the economic growth of a country. I mean, infrastructures have you know, multiplier to GDP between 3 and 5 times, depending on the business. Which means €1 we invest, you know, it's more euros to the country in terms of growth. And you know that growth is one of the key issues around Europe. Therefore, we should allow more spending in infrastructure by, you know, having, I would say, a more supportive regulation.
Luca, thank you very much. It was a real pleasure to have you, and we look forward to further engagement with Snam. Thank you.
Thank you, Nicholas, and thanks for the ICMA.